Do you guys like my t-shirt? It was a gift. It is a gift from a friend. Anyways, what's going on, guys? Welcome back to another brand new YouTube video. Today we're going to talk about something that has caused a little bit of a pickle. So today we're going to talk about something that has been causing a bit of a confusion among the community. And I understand, because whenever there's a new concept introduced to anybody, it could be confusing. And even though it might be very easy to grasp, but it's just because people tend to overthink and overlook the small details. So I'm gonna try my best to explain this concept here. Okay, so the topic we're gonna discuss today is called imbalance, and first we are gonna try to identify what imbalance is. We're gonna try to understand the basics. We are gonna try to understand its definition, and then we're going to hop onto the charts and see what role it plays throughout the markets, and how we can identify, how we can trade, and how we can just, analyze the markets using imbalance. Okay. So first of all, what is imbalance? By definition, it is something that is out of balance. It needs the other half. Okay. It needs to be balanced in whatever situation it's introduced to. So whenever there is imbalance, you guys have to understand that imbalance needs to be corrected. Okay, whether it's in Forex, it's in everyday life around you, imbalance is something that has to be corrected. That's just how it is. And if you look around you, a little getting off topic here and a little deep, but if you look around you, everything is created in balance. There's day, there's night, there's water, there's sand, there's fire, there's ice, there's good, there's evil, there's light, there's dark. So everything is basically created in balance. Okay, and whenever there's imbalance, it has to be corrected. So our idea of trading imbalance is whenever we see imbalance, the market has to come back to correct it before it continues or moves on. Okay, so imbalance is created whenever there is an impulsive move. Impulsive move means the market is maybe in a downtrend. So we're going to try to give an example of bullish impulsive candles first, and then we'll talk about bearish. So so let's assume the market is in a downtrend. It's in a downtrend. It's moving down, starts creating some sort of equal lows. So let's say the market is in a downtrend. We see some sort of consolidation. We see something like this, and then boom. This is where the imbalance is created, this huge candle. Now, in order for a candle to be identified or labeled or categorized as an imbalanced candle, remember, this is the only criteria that applies to imbalance. It shouldn't have any wicks to the left, and it shouldn't have any wicks to its right. Meaning the next candle after this candle should not have a wick that comes down and then continues higher, and the candle to the left should not have a wick to its top and then continues lower. No, this imbalanced candle has to be alone. It has to be independent of any market structure, any liquidity surrounding it. It has to be an independent candle. It has to be a lone candle. Okay, so there we go. So in an uptrend, we would see something like this. We would see a distribution or consolidation or a ranging market, and then we see something like this, and then impulsive move, which breaks all the previous market structure. This candle, this imbalanced candle, it is an impulsive candle. It is huge in size, and usually it has no wicks. An impulsive candle will have usually no wicks. There will be no wicks on the imbalanced candle itself. There will be no wick at the top. There will be no wick at the bottom. There will be no wick or candle around these impulsive and imbalanced candles. There will be no candle here. So there will be no candle here. There will be no wick in this area. So there will be no wick like this. If the wick of the next candle has already come to the half of the imbalanced candle, the imbalance has been filled out. Okay, and the market is not going to come back and reverse from here. No, The market is going to, it's already filled out the imbalance, it's going to continue. We trade imbalance as a reversal. So in an uptrend, we expect the market to break all the previous market structure after the impulsive and imbalanced candles. It will come back, and I always like to draw a zone right in the middle of an impulsive candle, right in the middle. And when the market comes back here, that is when we trade the opposite or the reversal. Same thing here. We expect the market to come back up and then reverse from here. So if you guys go to my Instagram, you guys will see back when I used to trade with Fibonacci in an impulsive move, and I was trading impulsive moves. What just happened? Okay, I don't know what happened, but my whole computer just died. It froze and died. Anyways, like I was saying, if you go to my Instagram, you guys will see that I was trading Fibonacci whenever there was an impulsive move. And if you guys pay attention, my Fibonacci would perfectly align up with either 50% or 61.8 with the candle. So it would align the 61.8 Fibonacci or 50% with the candle. So that is how I used to trade these impulsive moves. But the idea is the same. The market should come back to that imbalance zone and then continue with the trend. So anyways, now we're going to go to some examples that I've taken the trades over a couple of, I don't know, days or weeks or months, we'll see. And I'll also try to identify these in real-time markets. Okay, so over here on the 1 hour time frame on Euro USD, you guys can see we have a whole imbalance right here. This whole candle is an imbalance. Why? Because there is no wick to the left or to the right. It's an alone candle. And you guys can see this is now a downtrend. Why? Because it keeps breaking the market structure. So when it does that, you guys can see it broke the previous support right here. It came back exactly to the middle, to the half before it continued lower. So you can either trade the continuation of a trend or you can trade a reversal. This was a very good example of a continuation of the trend. I'll show you guys some examples of reversals or continuation actually. Reversal in a sense that the market is coming back up and then reversing, okay? But usually, but realistically, this is continuation of the trend. We are trading the continuation of the trend, okay? So next imbalance is right here. You guys can see this whole candle is imbalanced as well. So if you draw the imbalance to the middle like this, you guys can see it immediately got filled up and then continued for a little. So imbalance, you want to trade after a little while. You don't want to trade imbalance as soon as it comes back up. Yes, it can still reverse, it can still continue from there, but that's not the type of imbalances or ex-girlfriends that I trade. I like to give the market some time, but not too long as well. Remember, I trade when the market takes just a little bit of time, okay? Not too quick, not too long. Just somewhere in the middle. And right now, as you guys can see, this was a perfect example of not too soon, not too late, just right in the middle, after taking some time, market came back. If it comes back up too soon, chances are it's not going to be respected. If it comes back too late, chances are it's not going to be respected because the market has already been, the trend has already been changed.